Welcome back to the deep dive, everyone. Today felt less like a standard trading day
Oh, definitely.
and more like, well, a proper monsoon drama playing out on Dalal Street.
Yeah, you could say that. High stakes.
Absolutely. Picture the market as this tightrope walker, right? Trying to balance those global threats on one side and all the domestic buzz on the other. And Nifty, usually our steady hand, really had to fight through some choppy waters. It closed down to 0.31% at 24,574.20.
Not a great close.
No. And did you feel that tension every time it got near 24,600? It went up to 24,671.40, then down to 24,539.20.
A real roller coaster.
It just couldn't stick the landing above 24,600, could it?
It couldn't. But just when you thought things were looking really shaky for the broader market, Bank Nifty.
Ah, yes, the captain.
Exactly. Our seasoned captain showed some real resilience, managed to close slightly higher, actually, up 0.09% at 55,411.15.
That's quite something on a day like this.
It is. Hit a high of 55,545.80. Held above 55,237.95. It was like a fortress, standing firm while the rest felt the tremors.
A real contrast.
Definitely a contrast.
And this whole drama played out with a global backdrop that was, well, a bit subdued, maybe.
Muted is a good word. Yeah. U.S. indices were cautious after the Fed's latest signals.
And that had knock-on effects, right? Ripples across Europe, Asia this morning.
Precisely. NASDAQ cooled off. Shanghai hinted at some softness. It just added to the uncertainty.
Which set up this classic tug-of-war here at home.
Absolutely. You had the FIIs, the foreign institutional investors, pulling out quite a bit. Roughly 2,566 crore.
About $300 million.
Yeah, and the net figure was closer to 5,000 crore in selling. Significant outflows.
But then the cavalry arrived.
The domestic cavalry, our DIIs, domestic institutional investors, poured in 4,386 crore. Total purchases over 6,700 crore.
Wow. So they really acted as the cushion.
They were the lifeline today, especially for mid-caps and some financials. But let's be clear, the overall market breadth was weak.
Right. Nearly 3 declining stocks for every advancing one.
And the small-cap and mid-cap indices definitely felt the pain. They were bleeding.
A tough day underneath the surface.
Yeah.
And then we also had the RBI policy outcome adding to the mix.
Yes, the Reserve Bank, they held rates steady, repo rate unchanged.
Which initially the market didn't seem to love.
No, some saw it as negative, but the governor's statement was quite nuanced, I thought.
How so?
Well, he acknowledged potential short-term inflation rise, but also pointed to stable food prices. And crucially, no GDP forecast cuts.
Ah, suggesting rate hold benefits could offset other impacts like tariffs.
Exactly. That seemed to be the logic. And what really stood out, maybe explaining Bank Nifty's resilience,
Was the support for banking liquidity.
clear support. Yes. So it wasn't just a simple rate hold. It was a balancing act.
Fascinating. The details really matter there. Okay,
Okay.
let's unpack all this. Our mission today,
Yeah.
dive deep into the specific stocks. Which ones rode the wave and which ones, well, got wiped out. We're looking at a 6-month portfolio view for some key names, plus a specific short-term forecast for IndusInd Bank.
All right, let's do it. And we absolutely have to start with the day's biggest firework.
Godfrey Phillips.
Godfrey Phillips India, no question. This thing didn't just rise, it surged. Almost 10%.
10%. Closing at
10,854.50. It even hit a new 52-week high intraday, 10,861.50. Just spectacular.
And the triggers were pretty clear, weren't they? Q1 results were massive.
Phenomenal. Net profit up 56% year on year. Revenue jumped 33%.
Plus a bonus issue announcement, 2.1. And a hefty dividend.
That's right. 60 per share dividend, record date passed, but the bonus is coming in September.
What's really insightful here isn't just the numbers. It's how a company like Godfrey in a tough sector uses both strong performance and smart financial moves like a bonus to boost value.
It's a masterclass, really. Adapting in a tricky environment.
And you could feel the momentum, the hot money, as you say. Volume spiked, 6 times the average?
6 times. Though, you have to note, delivery was low, around 15%. Suggests a lot of intraday action.
Speculation, maybe.
Could be. But what's interesting is FIIs have been consistently buying this one. Hints of bulk deals, too. And MFs upped their stake.
Okay, so there's institutional interest underneath. What are the technicals saying?
It formed a very strong bullish Marubozu candle. Buyers in complete control. Momentum is strong. ADX is at 34.
But there's always a but.
But the RSI is at 72. That's flashing overbought. So a pullback wouldn't be surprising.
Right. So for short-term traders, maybe targets around 11,300 in the next couple of weeks, with a tight stop loss, say 10,240.
That sounds about right. For the 6-month view, though, the trend is clearly strong. Despite regulations, its resilience makes it a compelling, high-conviction bet, perhaps a smaller one, for a diversified portfolio.
Okay, from fireworks to maybe something a bit more steady, Trent Limited.
Yes, the retail rockstar showed good resilience today. Closed up 0.73% at 5,356.5. That's 4 straight days of gains.
Still a bit off its April highs, though.
About 4% down from those highs, yes. But the recent momentum is positive.
And their Q1 was solid, too. Revenue up strongly year-on-year, 4,100 CR to 4,800 CR.
Profit growth around 8.5% year-on-year, 391 CR to 424 CR. And quarter-on-quarter profit growth was huge, 38% from 31 CR.
Plus, their store expansion is really outpacing the sector. That signals real confidence, right?
Absolutely. The insight with Trent is they're not just riding the consumer wave. They're actively creating it with smart expansion and that strong brand loyalty. They stand out.
And the delivery numbers back that up. Healthy conviction.
Over 56% delivery today. That suggests smart money is holding yes. And institutional interest is definitely growing.
Technically, where does it stand?
Strong, close above its 20-day EMA. Bollinger Bands are expanding, which is usually a good sign for trend continuation.
Resistance ahead.
Key resistance is right at 5,400. If it breaks that cleanly, 5-minute 600 is the next logical target.
And a stop loss for short term.
Maybe around 5,220 seems prudent. For the 6-month outlook, Trent's a keeper, solid expansion, brand power, good management.
Okay, keeper status for Trent. Now, Dixon Technologies. It felt like a sprinter taking a quick breather today.
That's a good way to put it. Stumbled, but didn't fall hard. Closed down about 2% at 16,513 after opening higher.
Just profit taking after that huge run since April. Was it nearly 28% gain?
Exactly. Classic profit taking. There were maybe some whispers about margin pressure, a little disappointment on Q1 revenue growth.
But the delivery was low, right? Only 36%.
Correct. Suggests more short-term trading, not serious long-term selling. People locking in those nice gains.
And the candle today showed some buying interest at lower levels.
Yes, that long lower wick suggests support kicked in around 16,400. We should expect volatility, though. ATR is up, ADX is still decent at 28.
So if it closes below 16,400 again, maybe a short-term stop at 16,250.
Sensible. But the core insight for Dixon really is the fundamental story remains strong.
The manufacturing story for India.
Precisely. Jefferies likes the Q1 order book, forecasting really strong mobile volume growth for FY26, maybe 45-50% year-on-year.
And that partnership with Tech Mahindra for Industry 4.0.
That's a big long-term positive. Now, there have been some shareholding shifts, promoter dilution, less FII, more DII.
So institutions are swapping places a bit.
Seems like it. But Dixon is still the poster child for contract manufacturing in India. A long-term gem, especially with those PLI tailwinds boosting domestic production.
So for 6 months, the advice is
staggered entries, buy the dips, average into the position given the likely volatility.
Makes sense.
Yeah.
All right, let's shift gears to defense. Mazagon Dock Shipbuilders. The darling took a hit today.
Yeah, down almost 3%, closed at 2,764.5.
Just cooling off after that incredible run.
I think so. Classic profit-taking after a mammoth rally. Expectations probably got a little ahead after last week's big order book news.
That massive DIC approval, 57,000 crore.
Exactly. Huge potential benefit for Mazagon, BALHAL. The market priced a lot of that in quickly.
And again, low delivery volume. Around 20%.
Yes, points to mostly intraday traders taking profits off the table.
But technically, it formed a hammer pattern.
Right at key support. The 50-day moving average around 2,740 held up. That's a potentially positive sign.
So the insight is, defense spending is the long-term story, but expect corrections.
Absolutely. No stock goes straight up. Healthy pullbacks are normal if it holds above 2,700.
Targets could be 2,950, maybe 3,100, with a tight stop around 2,690.
That's the setup. For 6 months, the ship is still very seaworthy thanks to that defense spending tailwind. Could there be another 5-10% downside if geopolitical risks ease? Maybe, but it's a leader.
A strategic long-term hold then. Okay, Polycab India, the wire that keeps arcing back, as you say, down about 1.5% today to 6,825.
Yeah, this looks like sell the news after good Q1 earnings.
Right.
Plus, you have global copper price swings and just general market risk-off mood.
But the bigger picture for Polycab remains strong. Leadership in a growing sector.
Definitely. Strong balance sheet, good promoter holding. There's positive buzz about their supply chain, international expansion, the FMAG push.
Fast-moving electrical goods.
Correct. The insight is that savvy investors seem to be using these dips to accumulate. It feels like a keeper for many portfolios.
Technically, are the Bollinger Bands hinting at something?
They're narrowing, which often precedes a breakout, either up or down. Today saw a bearish engulfing pattern, which isn't great short-term.
But support is nearby.
Good support around 6,700. That's the 50-day moving average. For a short-term trade, you'd want to see it decisively break above 6,900, targeting maybe 7,150.
And 6 months. Still a core holding.
Given its sector, leadership, and financials, yes, it remains a strong conviction play.
All right, let's talk Sun Pharma. Lost some shine today, down over 2% to 1,595.2. And it's actually been negative since April 1st. What's weighing it down?
It's likely a mix of things. Maybe some short-term disappointment, could be whispers about regulatory checks in international markets.
General pharma sector weakness.
That too. The global pharma space has been a bit soft. What's interesting is the high delivery today, 63%.
Which should mean...
Well, it's ambiguous. Could be long-term bulls buying the dip, or it could be serious investors deciding to exit. Hard to say for sure just from one day.
And the U.S. tariff talk, does that impact Sun Pharma much?
Probably less directly than some others. Indian generics often navigate those situations relatively well. The core insight here, I think, is that even top-quality pharma names aren't immune to sector sentiment swings.
But their defensive nature remains long-term.
Exactly. Technically, it's testing long-term support right around 1,580. We need to see if it bounces here.
Stop loss below that, maybe 15,570.
Makes sense. Options data shows max pain around 1,650, which might keep the upside in the near term.
But for 6 months, the pharma uptrend is still intact over the longer term.
Over 12 months, yes. And after being negative since April, this stock looks, well, pretty undervalued on some metrics. Could be a Phoenix play.
A Phoenix rising from the, well, not ashes, but a dip. Okay, let's switch to something that's had a much better run recently. Tilaknagar Industries. Doubled since April.
Incredible run.
But felt the hangover today, down 4.3% at 486.6.
Wow. Yeah, natural hangover is a good term for it. After a rally like that, profit booking is inevitable. Plus, general consumer sector weakness didn't help.
But the underlying story, the demand for premium spirits, the promoter buying, that's still there.
Seems to be. And the really big news, the core insight, is that massive acquisition of Imperial Blue from Pernod Ricard.
4,150 crore, roughly $500 million. That's huge for them.
Game-changing. Largest deal in the sector since USL Diageo. It's set to nearly triple their revenues, from about 1,400 crore to maybe 4,500 crore.
And cases sold will skyrocket too.
From around 12 million to 33 million. Management says it's EPS accretive immediately, so it boosts earnings per share right away.
And strategically, it gets them into the huge whiskey market, moves them beyond just South India brandy.
Exactly. Whiskey is 63% of the Indian market. This makes them a true pan-India player. Huge transformation.
So technically, what are the levels now after this pullback?
If it breaks below 475, maybe take some profit. Volatility is high per the ATR. But if it holds the 490, 495 zone, maybe 525, 540 is possible soon.
And for 6 months, still potent.
The story is still potent, yes. But look, valuations are definitely stretched now after that run. For new money, maybe wait for a deeper correction.
Prudent advice. Okay, TVS Motor. The EV story hit a bit of a speed bump.
Just a small pullback, a pit stop maybe. Closed down 1% at 2,952.7. Still, it's up 21% since April, so perspective is needed.
Likely just profit booking again? Weakness in auto post-RBI? EV competition worries?
All plausible factors. Profit booking seems most likely after the recent rally, but the company's EV push is strong, market share gains are consistent.
And institutions seem interested. Long build-up in F&O.
That's right. The insight here is TVS isn't just resting on its laurels, it's actively pivoting to EVs. That makes dips potentially attractive for the long haul.
So 6-month view, still a good bet.
Yes, remains a great bet on the auto and EV theme. Accumulating near 2,900 could be an idea, maybe with a stop loss around 2,860 for those who are more risk-averse.
Got it. And Vishal Megamart, the new listing, held up well today.
Very mature performance, just a tiny slip, 0.17%, closing at 146.37.
It's in consolidation mode, right? But retail strength helped.
Exactly. What's really interesting, the insight here, is the huge trading volumes combined with healthy delivery figures shows strong underlying interest even during consolidation.
And there's talk of promoters increasing stake, New store openings helping margins.
Correct. It positions it as a fantastic play on India's consumption story, especially value retail. Strong brand, aggressive expansion.
Growing net worth, good institutional backing too.
All positives. Technically, ADX is flat. Bollinger Bands are contracting.
Suggesting a big move is brewing.
Often does. Support is around 145. Upside target for swing traders might be 152. For 6 months, outlook is bright. This consolidation looks at a good accumulation opportunity.
Okay, great overview. Now, the one we promised a specific short-term forecast for, IndusInd Bank, it really got caught in the undertow today.
It did. Down nearly 2%, closed at 803.35. Slid quite a bit after opening stronger.
Why the slide? Profit booking, rotational selling out of financials.
All of that. Plus, you have that ICII probe into Forex derivatives accounting hanging over it.
Institute of Chartered Accountants, right?
Yes. And Q1 earnings were a bit disappointing. High credit costs. Plus, general risk aversion towards mid-sized private banks, and of course, continued FII selling pressure.
But fundamentally, it's still solid.
Fundamentals remain strong, and the big news is the new MD and CEO, Rajiv Anand, coming in from Axis Bank.
What does he bring?
He's known for strategic clarity, using tech well, building strong teams. The market hopes for a turnaround under him.
But it'll take time.
It will take time. You won't see it in the numbers immediately, maybe next quarter. The insight is, despite solid fundamentals, sentiment and flows are creating headwinds right now.
And the bank has its own focus areas: profitability, costs, collections.
Yes, profitability first, cost management, scaling up collections, and leveraging existing customers for growth while managing risk. Especially key in their MFI and vehicle finance segments.
Microfinance, right. Needs careful provisioning there.
Absolutely. Technically, 800 is a big psychological level. If it breaks, 785 is the next support.
And the trend is weak.
ADX is waning, trend is tiring. It's clearly in a downtrend below major moving averages. For a 6-month portfolio, it's a value play, but...
Needs a strong stomach for volatility.
Definitely. Probably best to wait for a clear trend reversal before going big. Now, for that 2-3 day forecast you asked for?
Yes.
Look, short-term trading here is risky given the volatility. I'd advise against it. For positional players already in, maybe a stop loss at 780.
And potential upside if the market stabilizes.
Maybe 845, 860. There might be a gap up opening, but don't chase it. Profit booking at higher levels is quite possible.
Okay, very clear. Let's do a quick fire round on some others that were active.
Anand Wealth.
Slight dip, 0.27% down. Minor profit booking after a great run. Trend still bullish overall.
CAMS, Computer Age Management Services.
Quiet day of 0.5%. High intraday volume suggests a bit of a battle. Stable quality stock long term.
Jindal Steel and Power, down 1.39%. Cyclical stock, hit on a risk-off day. Trend looks bearish short-term, probably avoid for now.
JK Cement.
Positive day, up 0.46%. That's 7 straight up sessions, good technical, strong delivery, look set for more upside.
Lower slabs. Pharma again.
Down 2.5%. It's consolidating, but today's fall is a bit concerning. Looks weak, wait and watch.
RBL Bank. Another mid-sized private bank.
Significant drop, over 2%. High volumes, low delivery suggests turbulence. Not for the faint-hearted. Trend is bearish.
And finally, Wary Energies. Big move.
Massive, up 5.31%. Broke out on high volume. That's a strong momentum signal for more upside. Good renewable energy play, but expect volatility.
Okay, stepping back again. The global picture and what's next.
While globally it was a mixed bag, as we said, US, Europe mostly flat to slightly down, still digesting inflation, softer labor reports maybe?
Asia mixed too. Nikkei holding up, Hang Seng nervous.
Pretty much. Nikkei resilient, Hang Seng jittery. And this mixed global feel, plus that continued FII selling around nearly 5,000 crore net out.
Means the DIIs remain absolutely crucial.
They are the lifeline right now for our markets.
So for tomorrow's session, key levels. Nifty support.
Strong support at 24,500. If that breaks, look for 24,400. Immediate resistance is 24,700. A bounce is possible if global cues help.
And Bank Nifty, stronger base.
Strong base around 55,200. If sentiment improves, it could test 55,700.
Any potential breakout candidates for the adventurous?
For the thrill seekers. Dixon, Trent, Mazagon dock look interesting if the market finds its feet. Trent might push past resistance. Godfrey Phillips could pop on another headline.
And are the big players positioning themselves? FIIs, insiders, promoters?
Yes, we saw FII buying in Godfrey Phillips, Polycab, Trent as mentioned. Insiders were reported buying Tilaknagar and TVS Motor. And promoters up stakes in Godfrey and JK Cement. Always worth noting.
Definitely. So wrapping up for today, the market really is like Bollywood sometimes.
Oh, How so?
There's always a twist, a new plot line just around the corner. Makes you wonder, doesn't it? What surprising sector or stock might just defy everyone's expectations next, given all this churn? Or maybe, how will the market handle the next waves of Q1 earnings?
Always something to keep us on our toes.
Absolutely. So stay sharp, everyone. Stay invested, and be sure to tune in tomorrow as the deep dive continues, decoding the next chapter of this unfolding financial drama.